Hello, my name is Russell Myers, independent for U.S. President for 2024. So, Fitch credit rating agency has downgraded the U.S. federal credit rating from AAA to AA plus. Is this a big deal? Well, actually, it pretty much is. Remember that Moody's downgraded the U.S. credit rating in 2011 and has never restored it, also from AAA to AA plus. But what all of this indicates is that there is a growing disbelief, a doubt that the United States federal government is going to be able to pay off the debt or even pay down the debt. The debt just keeps on rising. This is also that doubt is being reflected in other places. More and more countries are selling off U.S. treasuries. There's more being sold off than other countries are buying. So this poses a problem. Who's going to buy up all this debt? Right now, the Federal Reserve is also dumping, they're unwinding the balance sheet of U.S. treasuries and selling it off to banks. Well, this poses a problem as well. If these banks are buying up this debt, which many of them are required to buy, the 12 select banks or so that are members of the Federal Reserve Board are basically required to buy this debt. That means that that reduces their liquidity. They are less able to loan money out to help grow or maintain the economy. Businesses need credit. They need to be able to borrow money to keep operations functioning smoothly. So, since the debt ceiling deal was reached at the beginning of June, 2 months ago, from what I understand, the United States, the Treasury, has issued somewhere between $600 and $800 billion in new debt. And now, Janet Yellen wants to issue Treasury bonds worth another $1 trillion in debt. And the government is expected beyond that to rack up another $800 billion in the last quarter of 2023. When you add all this together, you've got $2.6 trillion added to the national debt in only 6-7 months' time. Meanwhile, the interest on the national debt. Some sources are saying we'll be paying over $1 trillion in interest on the national debt by 2033. I'm going to argue that one. It's going to be a lot sooner than that. Here is the U.S. debt clock. And if you take a look here, right here, well, let me do this a different way. Okay, come on. Okay, so interest on the debt right there. $652 billion. Well, guess what one of the first things that has to be paid on the debt with the new budget is? The interest on the national debt. If you do not pay the interest on the debt, then creditors are not going to continue loaning you money. Of course, some of the U.S. banks can be forced to do this. It's like, so much for capitalism, right? But that's, no matter what, yeah, if we're already at 652 billion on the debt, then it's going to reach 1 trillion probably by next year. Now, just like if you have a credit card, if you have to pay at least the interest on that credit card or a bank loan, what have you, any kind of debt. If you're not paying enough to at least service the interest, then sooner or later you're going to default on that debt. And that's the fear that is rising right now, that the U.S. is going to default on its debt. As it is, with the amount of debt that is being issued by the U.S. Treasury, first of all, yes, the U.S. Treasury has to pay interest, and as interest rates go up, it costs more and more money to service that debt. You are paying more and more interest on the debt. Now, maybe the interest on the debt can be rolled over to the next fiscal year, but what that means is that just keeps on adding on to the debt. The interest keeps on rising. If you stop paying on your debts, the interest continues to compound and compound and compound, and you keep on winding up with more and more debt no matter what. Yeah, you can pay on the debt, but if you're not paying enough to keep up with the interest, then that interest just keeps on rising and your debt keeps on rising. Where does it end? Some people say, well, that's okay because the U.S. can just keep printing money. But the more money that you keep printing, it does devalue the currency. You may not see it very much as yet, but other countries with higher interest rates, if they borrow from the United States, then they have to pay higher interest on what they borrow. If they hold U.S. debt, that is a debt that we owe them. And if you're trying to trade with other countries, what does this mean? You keep on, sooner or later, the dollar is going to have to be devalued, or nobody is going to be able to trade with us, because if you keep the value of the dollar high, then it costs so much of another currency to buy any U.S. goods that they're not able to buy it. And we're already seeing that. There's less and less trade going on. We have slowing trade with other countries and increasing an increasing trade deficit with many other countries, except for Europe, which, are steps to sanction Russia and all these things have led to, and the increasing cost of energy and other materials that used to come from Russia have caused runaway inflation that has forced Germany into recession. In general, the entire EU and UK are now in recession. It may not meet the technical definition, but if you ask people on the ground in Europe, yes, they're in recession. If you ask people on the ground in America, yes, we are in a recession. It's not a full-blown depression yet, but we're headed that way. Our politicians talk about this concern about the debt, but they keep on adding more to it. The ones that want to bring the debt under control, do they want to increase taxes on the wealthiest people? No. They want to cut social support programs. Well, the social support programs are programs that support consumer spending. Wages in relation to inflation have remained stagnant or declined. The labor participation rate has increased. That's not a good sign. Some people say, well, that means there are more jobs. Well, maybe so, but what are those jobs paying? Why are people going back to work when they didn't before? Well, let me give you a simple standard example. Let's say a husband and wife. The wife is a stay-at-home mom, and she hasn't been working, but his wages have remained stagnant while the cost of housing, energy, transportation, and food have risen so much that they are living on the edge and about to go over. Well, okay, so she goes back to work. Maybe his wages have actually declined because his hours have been cut. So she winds up going back to work. That's not a good sign for the economy. Because she's not going back to work so they can get ahead. She is going back to work so they can survive. That's all. But maybe they've been getting food stamps. Well, now they're going to get that cut. The moratorium on student loans has ended, which statistics say the average payment on student loans, is about $400 a month. So yeah, if you got more than one person in your family and one of them wasn't working, then they're going to go back to work to cover the cost of that student loan. That doesn't mean that they're going to be able to find a full-time job if they're looking for one, because so many of the new jobs that keep on being added are low-wage part-time jobs or contract, temporary, gig work, Uber. You can work 4 hours a week at minimum wage, and you are considered employed. You are considered part of the labor force. So the labor participation rate rises. Unemployment goes down. That's how this works. You don't have to be able to earn a living at your employment to be considered employed and part of the labor force. But here's a bigger problem. Okay, so you're working, but your income is below the federal poverty level. That means you don't pay any taxes, so you're not actually helping to bring down the debt. Sure, you may get less in federal subsidies to help you survive, but no matter what, You reduce that, and you're reducing consumer spending, which supports other jobs. You go to the grocery store, you spend your money, or food stamps. Why? For each dollar you spend, you're not just paying for food. You are paying for the cashier, the manager, the stock person, the maintenance person, the delivery truck drivers. You're paying for farmers, ranchers, food processors, warehouse people, dock workers. Yeah, and on down the line with the farmers, you're paying for the fertilizer producer, which requires more trucks and more workers and et cetera, et cetera. This goes back to something I came up with some time back, which I called the burger, the hamburger project. Think about one hamburger and all the ingredients that you would put in a hamburger at home. And then start thinking about how many jobs are related to that. You think about the hamburger patty, the store, the rancher, the farmer that produces the grain for the cow to eat, food processing, mayonnaise. You got the food processor, the people that produce the bottle that it goes in, egg farm, chicken farm, poultry farmers that produce the eggs. You got the oil that goes into it, so other farmers. You got more truck drivers going every which direction for this. Think about that with every ingredient in that hamburger and see how many jobs you come up with. Okay, so you strip away public assistance so they can't afford to buy the ingredients to make a homemade hamburger, and how many jobs have you just eliminated? They talk about increasing taxes on the wealthy, but even if we actually implemented the amount that Joe Biden has proposed, we're still not at the level that we were at in 2016 when Obama was still in office. We're definitely not at the level that we were at back in the 1960s or anything like that. But we will, if you want to increase wages on workers, then the workers have to have a living wage. The higher the wages go, the higher the taxes on that person should be, but that's not the way it works, and you know it. The higher up the income scale you go, the less as a percentage of income you pay in taxes, because you're able to find different tax dodges, loopholes, ways to avoid paying it. These are the same people that will lay off workers to increase their own profits, even though they're making enough money to last 10 lifetimes in a year. Now, I'm sorry, this is a little bit disorganized. I didn't compose this in advance. This is all off the top of my head, but you just keep on, but you think about all of these things and the way that they fit together. You reduce public assistance. You reduce consumer spending. You have jobs that don't pay. They pay less than the poverty level, so you wind up not paying taxes. The debt keeps on increasing. worry, then you don't spend money. You reduce consumer demand, so more people get laid off. The debt keeps on rising. More and more countries look at it and say, well, unless you're going to pay more interest on the U.S. Treasury bonds, which increases the debt even further, then we're not going to buy Treasury bonds. For years, U.S. Treasury bonds have been paying, 1%, 2%. Oh, well, now it's up to 5%. But you can make more money loaning it out. It may be riskier, but you can loan that money out elsewhere. You can invest it somewhere else. Hence, the stock market keeps on rising. People will take the risk of that investment, but those investments are not creating more jobs. Those investments only enable corporations to lay off more people so that their big investors get paid more dividends. And so that corporate executives that get stock packages as part of their compensation make more money. These are problems that we need to address. We cannot keep kicking the can down the road. Right now, there is no debt ceiling. The debt ceiling has been suspended until January of 2025. So how much damage can Congress do during that time? How many more hundreds of billions are we going to give to Ukraine? How many hundreds of billions more are we going to spend on militarism while we take food away from our own people, leave children hungry, our elderly food insecure, more and more people becoming homeless or at risk of being homeless, people living without utilities as temperatures increase. July was the hottest month on record. Where does it end? What is the solution? Because I'm not hearing any realistic solutions by anybody that actually intends to implement them. If you think anybody, including Cornel West, who endorsed Joe Biden, yeah, he criticized him, but he still endorsed him. That just means that he's flexible. He's going to, do whatever that RFK Jr., yeah, he's just another Democrat, really. Marianne Williamson, well, you draw your own conclusions there. What do you want to do? You want somebody that's going to fight for the American people, for the American economy? Then you're looking at them. Or you can just go with the lesser of X evils. That's your choice. You go with the lesser of X evils, you're still going to get evil. All right, share this video. Talk about these subjects. If you can afford it, please donate at the moment. Please donate whatever you can to help expand this campaign. And I will catch you in the next one. Thank you for watching. Have a good day.